Welcome back. You're watching us here on Chartbusters on CNBC-TV18. From an issue that just listed to an issue that has just opened. The primary market action. Enviro Infra Engineers IPO opens today, will close for subscription on the 26th of November. The company is actually, planned to raise about 650 crore rupees, between 140 to 148 rupees as a price band, and at the higher end of the issue price, seeking a market cap of close to around 2,600 odd crore rupees. Manish Jain, who's the managing director of the company, joins us now. Thanks a lot, Manish, for joining in. Just a couple of questions first up. One of the objects of your issue is to actually repay debt on the books of the company. So if you could tell us, how much is the debt on the books as of now, and what will it be once you repay the debt? And secondly, what is your current order book?
Good morning. Good morning for having me on the show. The total debt of the company as on 30th of June is 300 crores. So we are doing projects under EPC as well as HAM.
I think we've lost the connection out there. We just repatched that connection. So the company obviously is into wastewater and sewage treatment. Last year they did revenues of close to around 700 crores with profits of a little over 100 crores. And we will get to know a little more about their order book and the objects of the issue as well. They are looking to, repay some of the debt that they have on their books with regards to this. The management has said that it'll be about 200 to 300 odd crores as of June.
Let's get chatting with the management of Enviro Infra Engineers. We have with us Mr. Manish Jain. Hi, Mr. Jain. You were telling us the total debt in your books is around 300 crores. Out of this issue, 120 crores will be paid back. So post the payback, the net debt will be in the vicinity of around 180 crores. Could you confirm that? And on this 120 crores, what will the interest saving be?
Basically, on a standalone basis, the overall debt in the books is 210 crores. So we intend to repay a term loan of 120 crores. So standalone basis, the turnover, the term loan in the books that shall remain will be somewhere around 90 crores. Further 98 crores that comes from the term loan from our HAM projects. So that HAM project term loan that will continue because these are in SPV books. So that is a subsidiary of the Enviro Infra Engineers. So those term loans in itself will continue. Going forward, this is one of the HAM projects which the company has already executed. There is one more HAM project for which the company shall be taking up that project in future. It is a Mathura HAM project for which we have earmarked the equity contribution of 30 crore from our from the IPO itself, and then there is a working capital requirement of 181 crore which is proposed from this IPO.
All right.
What is the interest savings on the 120 crores? You were borrowing at 10%, 11%. What was it? So effectively, you'll save 12 to 13 crores is what we understand.
Yeah, the main purpose is not that interest saving, rather than it's a cash flow cycle where we are more concentrating on. So the cash flow cycle requires that because we are doing government projects, so we are required to furnish bid bond guarantees, performance guarantees, and retention securities, for which we are having working capital limits from our bankers. So the ultimate purpose, because all these working capital limits are backed by FDRs. So in future, we would like that the margins which we are required to put into our banks, going forward, our credit rating, which is currently A-, gets further improved so that the FDR margins and the collaterals that get reduced. So that BC came to reduce it and then bid on a strong balance sheet for further HAM project we can bid forward. Thank you.
You speak about your cash flow and working capital as well. Working capital days have been very stretched in the last couple of years. Cash flow from operations was negative in FY24. Could you tell us what is your working capital cycle right now, and where do you intend to take this with this infusion that you're doing in your books?
The net working capital gap for FY24 is 40 days. So the total cash conversion cycle, which includes inventory days, unbilled revenue days, and then debtor cycle is 160 days. And the creditor repayment days are 120. So the net working capital gap is 40 days. We understand that we are making the payments to our MSME vendors within 45 days time, and non-MSME vendors within 60 days time. So we expect that the working capital cycle going forward, it will get reduced to from 160 days, the cash conversion cycle, which is presently 160 days, it should come down to somewhere around 140 days time.
Got it. Can you tell us a little bit more on business? The WWTPS and the WSSP, both those two are the verticals that you have as of now. How do you see the mix changing going ahead?
Basically, there are three types of treatment plants. One is sewage treatment plant, where is the domestic waste which is being treated. The other one is the industrial one, wherein the wastewater emanating from various industries in an industrial cluster, it is treated. So that is a common effluent treatment plant. And third one is the potable water which is coming to our houses. So the water after being drawn from rivers is taken to a plant, treated, and then supplied to our homes for drinking purposes. So basically, there are these three types of plants along with its schemes. Scheme says that the pipelines and pumping stations which are required to be constructed. So this constitutes the entire scheme then. So this is the area, and company exists in all the three segments. Company is driving the growth backed by its strength in its designing capabilities along with the execution capabilities. We are having a team of 180 plus engineers. Myself, my elder brother, and the chairman of the company, Shri Sanjay Jain, we both are chemical engineers. So process engineering and designing has always remained our USP. And we are being backed by a team of professionals in our company. So we are doing the entire designing in-house. Along with this, the
Right.
execution of the projects is done in-house. So we are able to execute the projects well in time, remain ahead, and the EBITDA margins and PAT margins that are being maintained for the past 3 years consistently.
All right, we take that point. We'll discuss more on your order book, your revenue generation, and your execution over the next few days when we converse with you when you list. But up until now, thank you so much for joining in. Wish you good luck for the issue, Mr. Jain.